Good afternoon and welcome. This is Matthew Lindsay with Precision Home Group here in Anchorage, Alaska. Coming to you live like I do every day to talk to you about business, life, and real estate. Precision Home Group is your solution to all your real estate needs. So today, it's Friday. Typically, we come to you, me and my wife Alicia, with the Matt and Alicia Show to talk to you about marriage. We talk to you about how we've created all of our companies together, how we cooperate, how we work with each other daily in and out of the office to create a life that we have created by design. So today, she's not here. She's off doing other things today, so just me today. We're going to continue on with commercial real estate like we've been talking about throughout this entire week. So today, what I wanted to talk about is things that you need to make sure you have in your letter of intent. Now, with a letter of intent, not everybody knows what it is. It's very simple. So when you have walked a property, done your research on a property, talking commercial here, and it may be a lease, it could be a commercial purchase, it could be a business, whatever type of commercial property you intend to purchase. Before we go into the purchase and sale, before we sign or execute a lease, what we're going to do is we're going to submit a letter of intent. That's right. All it is a letter expressing, hey, I intend to purchase this. It's going to start those talks, start the due diligence, start the talks on everything there is to know about the property, right? So what do we put in that letter of intent? What does it need to outline? And what are the things that need to be addressed? That's what we're talking about today. So the 5 things really that I feel should be addressed in every letter of intent is going to be first and foremost, try to find some good lighting here. First and foremost, the purchase price and terms associated with the purchase price. So with the purchase price, we need to look at, is it going to be, what are the numbers based behind that? You know, we need to express what that is. There's going to be some financing behind that as well. Hey, is the seller going to hold back a portion of that? Are we putting some down? We're going to finance the deal, things like that. So we need to expressly put in there purchase price. There is times where you don't address that until you get more information. So that also should be written out and should be explained when that will be brought up and addressed. Number 2 is going to be the earnest money and the terms behind the earnest money. So why I bring that up is earnest money. You're going to put that down with your letter of intent. Now, you may write in there that's 100% refundable. You might write in there that it goes hard at a certain point where you wouldn't be able to receive that earnest money back if there's something that came up. There's certain times throughout the process that if you get past the due diligence phase that you may not get that back. You've tied that property up for a long enough period of time where that seller could have actually found another deal, a better deal possibly, and may have lost out on that. And so they keep that earnest money because of what you've put the situation you've put them in. So the second thing is going to be the amount of earnest money and the terms behind that. The number 3 is going to be the source of funding. Hey, is this going to be a financing deal? Is this going to be an owner finance deal, a bank finance deal? Is this going to be an all cash deal? Is there going to be a percentage down and maybe a percentage of profits in the future that goes to the seller? You know, there's a lot of creative ways to do this. Is this going to be brought up by a capital group? Is this going to be syndicated? There's so many things where you can come up with the capital, with the money to actually be able to afford this property, to actually purchase this property. So that's going to be addressed in your letter of intent as well. So number 1 was purchase price and the terms behind that. Number 2 was going to be the earnest money and terms behind that. Number 3 is the financing type. Number 4, which is really important, is going to be the timeline of the transaction. Outline, hey, we want to close early. This is going to take us 30 days, and here's the outline of everything that's going to be done during that time. Or, hey, we're going to tie this property up, and then we're going to make the sale contingent on us getting financing. That's way different situations. One is, we have financing, we're done, we're ready to go, we want to close this 30 days, let's do this. Or, hey, this may take us 6 months. I know transactions that have taken several years to complete. So outlining the length of time of the transaction up front is going to be huge when a seller is really considering what they want to do with that letter of intent, whether they want to pursue it or move forward on something else. And then number 5 is going to be, what are the after-sale responsibilities of the seller? Say this is a business you're purchasing. Do you want the seller of that business, the current operator of that business, to remain to consult on the new business? Do you want the current owner of that business to remain on to make sure it's a smooth transition? Is there going to be management? Is there going to be other responsibilities of the seller after the sale of either the real estate or the business or anything else? So that needs to be outlined and mentioned in the letter of intent as well. That can be agreed on later and brought up later for sure, but if it's something that you are aware of up front and that's part of the deal and you want to make sure it's addressed up front, that needs to be in the letter of intent. So those are the 5 things for the purchase price, the earnest money, the source of funding. We're looking at the timing of the transaction, and then the after-sale responsibilities of the sellers. That's 5. Number 6, though, is going to be the additional clauses. Every deal has additional clauses. There's going to be something that is specific to the property, the business, whatever it is that you're purchasing. And you want to make sure that that's addressed, okay? And leases, I mean, you have a whole slew of non-competes, first right of refusal, you name it, there's additional items in there. With the purchase of a property, going to be additional items specific to that situation. Businesses as well. So you want to make sure that whatever additional terms, whatever additional contingencies that you want addressed, you put those in a letter of intent. So that's 6 things that need to be in a letter of intent. Really simple. Anybody can draw that up for you that's been in commercial real estate and knows what they're doing. And they'll walk you through every step of the way. So that's been 6 things that you need to make sure are in the letter of intent. If you have any questions about that at all, what a letter of intent is, what the purchase or listing of a commercial property or business looks like, I would love to help, love to talk to you about that. Just reach out to me, Matthew@precisionhomegroup.com, or send me a direct message and I'd love to get right back to you. Sounds great. Hey, thanks for watching. Thanks for tuning in. Hit that like, follow, and subscribe. And we'll be back tomorrow morning.